Hi everyone, welcome to Market Makers. Today on the show we have Mr. Atul Tantia, Executive Director and CFO of GPT Infraprojects. It's a Kolkata-based infrastructure company. Welcome Atul.
Thank you, Milan.
Thank you for taking out time for this show.
So it's my pleasure.
Thank you. So let's start the discussion with some basic questions. Please tell us about GPT Infraprojects business model and what kind of projects do you execute?
Sure. So Milan, like you said, GPT Infraprojects is a Calcutta-based core infrastructure player. We are basically into core infrastructure for government contracts. We primarily work for railways and roads. This is a company which has been there for the last 40 odd years and is primarily into two segments, which is EPC and manufacture of railway concrete sleeper. We are one of the major mid-size infrastructure players in the country and are responsible nation builder. The infrastructure business executes bridges and road contracts with the focus more towards bridges because that is our core competence and because we feel that it provides more value addition in terms of engineering skills and thereby leading to slightly higher margins compared to the run-of-the-mill road contracts. These contracts are generally with the railways, NHAI, various railway PSUs, MORTH, and others. The PSUs include the likes of RVNL, IRCON, RITES, DFCC, and others. This segment is the backbone of our business and contributes almost 85% of our revenues and order book. We do all the contracts in-house, especially the bridges from foundation to finish. When I say foundation to finish, it includes all kinds of foundation. So if your viewers are aware, we do bridges with foundations like pile foundation, well foundation, cashin foundation, and others. Superstructures also, we do all kinds of superstructures, whether it is steel, concrete, cable stay, and others. We have done in the past 2 out of the 4 mega bridges for railways. One of them is a double-decker bridge over Ganga in Patna. Another is a bridge over Kosi in North Bihar. So we have bridged most of the larger rivers of the country. Currently, we are executing multiple bridge contracts over the country, with the largest bridge contract being a contract valued at rupees 740 crores over Sangam in Prayagraj, which we recently bagged from NHAI. In addition to that, we also do some urban infrastructure works, wherein we do some metro works for, we are doing in Calcutta City for RBNL. We're also doing 3 bridge contracts in the Mumbai city for MRIDCL. These contracts are in the very densely populated areas of the city and speak to the management bandwidth of handling such challenges. We are one of the only players which offer a full service solution, which is an in-house design team, construction project management team, which is technically capable of handling these multiple challenging contracts within the allotted time and with 0 accidents. Now, coming to the concrete sleeper segment of the company, this is a segment from which we started in 1980. So concrete sleepers, if your viewers may or may not be aware, are the concrete slabs below the railway tracks. We focus again here on the entire value chain from design to manufacture and laying of the tracks. Today, we are one of the few companies in the country which has presence in 4 countries, which is India, South Africa, Namibia, and Ghana, and supplying to the railways and local markets. This segment contributes about 10 to 15% of our top line and has been, and is the segment from which we started in 1980. The success of the company in complex markets such as Africa shows the management bandwidth and the expertise in handling multiple geographies, with each country having their own nuanced requirements for these projects. In terms of order book, the overall order book outstanding is about 2,880 crores, which is approximately 3.6 times our FY23 revenues. And this provides an excellent growth visibility to the management and the investors. With strong execution on the back of the largest order book in the history of the company, we are quite confident of crossing 1,000 crores revenues this year, which is a growth of almost 30% for the year. And we expect to grow in the next 5 years at 20% CAGR, which is almost beating the GDP growth by a large percentage. We are being quite disciplined in terms of our management bagging of new contracts. The management has fixed a EBITDA threshold of 13% for acquiring new contracts, which we feel is quite important for this industry and sector, because this is a sector in which we fix our own prices for as we participate in public tenders. And testimony to the fact is also that our decadal EBITDA has been north of 13%, thus, which is showing that our bidding strategy has translated to actual numbers on the ground. Another focus for the management has been on the cash flows, which leads to cash flow to EBITDA conversion of north of 90%, given the strong focus on recovery of customer dues and ensuring working capital is in check. This also allows our ROCE to be in the high teens and is expected to touch the 20% mark this year, which again is one of the highest for the industry. The management has also adopted a dividend policy, which translates almost 30 to 35% of the profit being distributed as dividend to the shareholders, which gives confidence to the investors that there is actually cash flow on the ground, and the EBITDA is getting converted to cash. Again, this has been maintained over the last decade, and we are one of the only mid-sized infrastructure companies with an unbroken track record of paying dividend every year over the last decade. In terms of our corporate governance, we have a very strong and independent board of directors, having a good corporate governance threshold, which is evident from the fact that the above dividend policy was adopted voluntarily. Both our NRC and audit committee comprise of 100% independent directors who are quite renowned in their own fields and provide the necessary checks and balances on the management decision making. We also have very renowned statutory auditors with MSK, part of the BDO network, as our statutory auditor for the last 3 years. And earlier it was with SR Bartley-Boy, part of the ENY network for the 10 years. The management has also undergone a voluntary ESG audit and is on path to adopt the BRSR report in the next 2 years. This shows the focus of the management on strong corporate governance parameters, thus providing comfort to investors and various stakeholders. We are listed on the BSE and NSE, and the current market cap is close to $100 million, which is about 830 odd crores. I hope I've been able to give a brief about the company. I will be glad to address any further questions that you might have.
Perfect. That was an excellent summary. So Atul, you said that this year's annual expected revenue is about 1,000 crores. Is that correct?
Correct. Which is a growth of about 30% from last year.
Okay, and that is your FY24 consolidated revenue expectation.
Correct. So FY23 we did about 800 crores of revenue, and FY24 we will cross the 1,000 crore mark to do almost 30% growth.
Excellent, thank you. So very interesting story that you have, but we would, as you said, GPT has been in the business for about 40 years. We would like to understand how has the company evolved over the years.
Sure. So, like you said, we have been in the business 40 years. So we started in 1980. The company was incorporated in July 1980, primarily to manufacture railway concrete sleepers. We got a contract from the Indian Railways that year to set up a factory in Panagar near Durgapur in West Bengal, to set up a factory, and we commissioned that factory in 1982. This was the business of the factory of the company for over 2 decades. And in the interim, we also made some supplies to Bangladesh and also set up a concrete sleeper plant in Myanmar. When the next generation of management entered the business in 2003, the management decided to foray into the EPC segment, which was a very fast-growing segment, especially in the 2000-2003 times, because government focus now pivoted to construction of large infrastructure contracts. However, the management had a strong belief that we should do these contracts, but with a focus on profitable contracts and having a disciplined margin so that we could give returns to the shareholders. Since this was a government business and there were some entry barriers, because bidders needed to have the credentials of having done similar works in the past and other financial criteria, initially till 2010-12, the contract sizes were quite small, between 10 to 50 crores. With the focus of the government, like I said, on this sector, and because due to the underpenetration of this infrastructure in the country, the management felt the need to strengthen the balance sheet and increase the credentials. So we did a preferential issue in 2010 and raised about $6 million from external shareholders for the first time in the history of the company. This led to the company pivoting and growing much, much faster. As the company built its capability in bridge works and road works, we can now bid for much, much larger contracts. And our average ticket size for contracts is in excess of 250 crores today. And we are eligible to bid for contracts up to 1,000 crores in our own name. Recently, we have announced that we have received a 740 crore contract from NHAI, which shows the credentials that we have garnered over the last couple of years. The management also has a strong focus on reducing the debt and aims to become net debt free in the next 3 to 4 years. It is a team comprising of more than 700 people, including senior technical, administrative, supervisory team, which allows the company control over its operations. And we use much modern tools for project monitoring and cost optimization. We have been using SAP for our ERP works for project management since 2011, and it allows the management control over the day-to-day business and ensures good internal financial control. We have a policy to always deliver the projects within the time and adhering to the quality standards to meet the customer satisfaction. This is also attested by the fact that we have received various industry awards and appreciation letters from government customers for meeting these targets set out. This is a sector which is continuing to grow, and we think that we are again on the next growth path to grow this company further.
Interesting. So, a decade back, you were doing projects worth 10-15 crores, and now 700 plus crore worth of projects. So that's a huge leap that you've taken in last 10 years. So, and you also mentioned that, for next 3 to 5 years, you are expecting CAGR of about 20% in revenue. So what are those factors that are, giving you that kind of confidence of this level of growth?
Sure. So as you are aware, the government has announced a national infrastructure pipeline of 102 lakh crores. This is a pipeline which is one of the highest in the world and shows a strong focus of the government on this growth and on this sector, and it ensures that we are also confident of this growth momentum carrying forward. We, like you said, intend to grow at that 20% CAGR over the next 5 years. And this also is with the disciplined policy of sticking to EBITDA contracts, which can maintain the 12 to 13% EBITDA margin. And this will also make our growth sustainable and ensure that the cash flows are quite good, strong. We are confident, like I said earlier, to exceed the 1,000 crore mark in this financial year, which is FY24, which will represent a growth of almost 30% this year. This is also because this sector is one of the largest employment generators, as you are aware, and it also grows the ancillary sectors like steel and cement, which is why the government's focus has always been. Given our credentials, we are one of the few companies in the country who can bid for railway contracts of rupees 1,000 crores in our own name, and we are able to compete in market with much of the larger players because of the cost optimization policies and lesser overheads compared to the larger players. This is one of the reasons why we are confident of growing at 20% CAGR over the next 5 years.
Okay, interesting. And based on your experience with your peers, which may be, relatively larger in size compared to you, once the scale of business grows, do you expect, your overheads to increase in terms of margins, or you would get benefits of economies?
So definitely the economies of scale will kick in, and this will be much better for players like us because we are nimble on our feet. We are able to take faster decision making, and we will be able to keep the cost in check. The larger players obviously have their own expertise and skills, but we, like I said earlier, we were earlier doing contracts of 10 to 50 crores. Today we are doing contracts of 250 crores, and recently we have bagged a contract of 740 crores in our own name. And we are quite confident of delivering that contract over the 30 months that is allotted for the contract from NHAI. This will again give good credentials to us, and it is a milestone event in the history of the company.
Interesting. And you said you have a current order book of about 2,800 crore plus. So how is the split between your infra business and the concrete sleeper business?
So the infra business is about 2,650, close to that. So about 90% is the infra business, and about 250 odd crores is from the concrete sleeper business. This again, both the segments have an order book of about 2.5 years. The concrete sleeper business again is a order book based business. So we are manufacturing to the order. We are not manufacturing to stock. So we have an order book there of 250 crores. The largest order book in the concrete sleeper segment is a 123 crore order for manufacture of concrete sleepers in Ghana. which we recently got, for which we commissioned the factory in Ghana in June of this year. That factory is undergoing technical approvals, and we expect to start the commercial production in Q4 of this financial year. The the infrastructure segment comprises much large contracts, including this 740 crore contract that we recently got. We also have multiple contracts primarily in the eastern and the northern part of the country, including 3 contracts in the Mumbai city for MRIDCL, which is a bridge over Baikala railway station, bridge over Ghatkopar railway station, and a bridge connecting the Ghatkopar railway station to the Eastern Expressway.
Interesting. And we were looking at your segmental financials. We saw that there's a lot of volatility in the concrete sleeper business, and in terms of the performance of the segment. So what are the reasons for that?
So concrete sleeper segment, honestly, the India business has not been that volatile, because the India business is a much steady business. It has, and the economy of the country has also been quite good over the last 5 years. What has been volatile, unfortunately, is the business in Africa. Post-COVID and I would say post-2020, fiscal 2020, Africa unfortunately has gone through tough times due to COVID and the economy being in stress, and which has also led to a lot of currency fluctuation. Having said that, we see that phase has now passed, and we started to see a lot of new contracts in Africa. Like I said, recently we have bagged a contract in Ghana as well, for which we set up the factory. South Africa also, the factory has picked up, and we have also participated recently in new tenders for South Africa as well. Namibia also, they have announced a project for the Trans-Kalahari line, which will connect Botswana to Namibia. We are the only sleeper manufacturer in Namibia, and we expect that Namibian factory will be back to full operations shortly. Again, the Trans-Kalahari line is funded by the African Development Bank, so funding will not be an issue for Namibia, as South Africa, as well as Ghana.
Okay, got it. And in general, infrastructure business is typically considered to be cyclical. So based on your past experience, although you have a strong orders in hand, how would you expect, or how do you manage the cyclicality if it comes?
So infrastructure segment is cyclical to the extent that the government focus on infrastructure should be there, because it is a sector which relies mostly on public spending rather than private spending, and we do address mostly the segment which relies on the public spending or the government spending on these contracts. Fortunately for the country, I think the last decade, the government's focus on infrastructure has been quite strong, and we expect that momentum to carry forward as well. The government has also started with these initiatives like Project Monitoring Group, PM Gati Shakti, wherein the larger contracts are monitored on a very senior level and ensures that the decision making is not delayed and contracts are executed on time. The earlier days when you had issues with respect to land acquisition and delayed decision making we think are a thing of the past, and we hope that now with the changed mindset that should not be repeated again. Infrastructure, like I said earlier, is also one of the largest employment generators. So any government that does come in will have a strong focus on this sector, and we expect that this should also continue going forward as well. Infrastructure segment, people also think about it as more a seasonal business, because the first half is generally 35 to 40%, and the second half is the balance. However, with the advancement of technological advancement in the construction industry, with the use of much advanced machines, this has now moved to almost a 45-55. So now the seasonality is also not there. So this is a sector which I think is quite ambitious and aligns our visions for the next decade to contribute to the robust infrastructure of the country. That is why we are quite confident of achieving the 20% CAGR, despite a much larger base of revenues from the earlier 500-600 crores to now 1,000 crores this year. This will be achieved keeping the EBITDA margin consistent at 12 to 13%, as we have done historically, and because we feel that a profitable growth is something that is quite good for the investors and shareholders, and this will lead to meaningful infrastructure development and economic growth of the country.
Interesting. Happy to hear that, while India is growing, companies like yours in infrastructure sector are also, taking that leap. So, but however, for next 1 year or so, do you foresee any risk to the business?
Sure. So next 1 year, I think that as everyone is aware, most of our your viewers, I'm sure 100% are aware, it is a election cycle. So it is an election cycle not just in India but also globally. Whether US is also undergoing an election next year in November. So we believe that a stable government contributes to the overall environment for conducive growth of the business. A shift from this stability will introduce some challenges and the ease of doing of business. Therefore, obviously, we need to monitor this political landscape and be prepared for any potential changes that may arise. We are quite confident, like I said earlier, that the present government or any government will keep to focus on this sector because it is a sector which is the need of the hour and it also leads to a lot of employment generation. In addition to that, the conflict in the Middle East and others will lead to change in the global dynamics, and any impact on the food prices could impact the inflation. This will, and if the inflation reaches the RBI threshold of 6%, then obviously RBI might attempt to increase the interest rates. We recognize all this and we are quite proactive and keeping the inflation checks. We do safeguard our contracts with raw material price inflation clauses. This allows the commodity price increases to be a pass-through to the customers, and we are able to protect our margins.
Thank you, Atul. Thank you so much for taking out time for this discussion and telling us in detail about your company.
Thank you, Milan. I hope that I've been able to address all your queries and look for such interactions in the future as well. Have a good day.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.